Welcome back to another video. So today we'll be doing paper 2. This is an exemplar from the 2018 from the Department of Basic Education. You can download this paper from the Stanmore website. So if you say grade 10 accounting past question paper on Google, the website will pop up Stanmore website, and then just click on it, and then you just have a whole lot of question paper to choose from. And without wasting more time, let's get into the video. So guys, please don't forget to like, comment, and subscribe. This is 2 hours, and we have instructions and informations, so it's always very important to go through them before you write. The first one says answer all questions. The second one says a special answer book is provided in which to answer all questions. So remember, with accounting, it's not like business or other subjects. They will provide an answer book where you will answer, and a formula sheet for financial indicators. I've covered a video on paper 1. Please check that out. I've done income statement, balance sheet, everything with regards to paper 1. Gap principles, I have done it. An interpretation of financial statements, I have done that. Check out my previous videos, you will see that. Even it's part of this playlist, so yeah, you will see those videos in this very same playlist. Revision accounting paper 1 and paper 2 grade 10. You may use a non-programmable calculator. You may use a dark pencil or blue or black ink to write the questions. Then I skipped number 4, show all workings to earn part marks. So it's very important to show how you got to the answer. That gives you mark. So if you don't show how you got your answers, you're gonna be forfeiting marks. So it's very important that you remember it's for your own sake, for your own benefit. For your own sake, please include calculations. Where applicable, show all calculation to 1 decimal place. So if you get fractions, just correct it to 1 decimal place. I hope you know how to convert. Write neatly and legibly. Use the information in the table as a guideline. So the examiner has given you how many minutes should you budget or put towards a question. So they say 15 minutes for question 1, 30 minutes for question 2, 30 minutes for question 3 as well, 25 for question 4, and 20 minutes for question 5. So today we're going to just be doing 2 questions. We will be dealing with question 1 and question 3 respectively. Then I will see which question I will do next. So just come back tomorrow for the next question. It will be dropping exactly tomorrow, and I'll probably do this in 3 videos, or yeah, 3 videos I think, or 4 if I might decide to push it, but I don't think I'll even get there. So I just want to finish this question paper as soon as possible. So let's do these 2 questions. Subscribe. So this is the first question. It's VAT and ethics. So remember, ethics is good practices. Let's do value added text. Indicate whether the following statements, 1.1, indicates whether the following statements are true or false. Write only true or false next to the number in the answer book. So 1.1.1 says VAT is charged on all goods and services. That is false if you have done VAT. I have a video of VAT on my channel. Please check that video out. I've covered all the information that is needed and the theory as well, to help you know that not all goods are charged VAT. There are zero rated VAT items, and there are also exempted items. So 1.1.1 it's false. 1.1.2 says it is compulsory for all formal business to register for VAT. False. Company has some companies do not even provide VAT services. VAT charged goods, so they don't have to register for VAT. And then 1.1.2 is false as well. 1.1.3 says businesses must submit their VAT returns to SARS. That is very true. It's very important for businesses to submit their VAT returns so that they do not get penalties when you're registered for VAT. 1.1.4 says output VAT is VAT on sales received by the business. Yes, output VAT is VAT on sales. Watch that video. I've covered this theory. And then 1.2, note the missing amounts denoted by A to D. Note that the standard VAT rate is 15%. So we have to calculate A, B, C, and D respectively. So look at the VAT inclusive is the amount that has VAT in it. And then the VAT exclusive is the amount that does not have VAT. So let's say you go into store to buy a packet of potato chips. So the price, they will say on the receipt till slip that the price exclusive of VAT is the total that you paid, and then there will be a VAT amount there showing you how much is the VAT amount calculated at 15%, and then they'll also have VAT exclusive. So that is the cost of those chips without taking VAT into account. So that is VAT exclusive. When is VAT exclusive? It's just the normal selling price without VAT added to it. Then the VAT inclusive is the total that you pay on the receipt. You pay everything including the VAT, and then the VAT amount is the 15% of the exclusive amount. So 15% of the exclusive amount, it's the VAT amount. So let's do number A. VAT exclusive is 1,300. The VAT amount is 195. So to get inclusive, you can just add exclusive plus VAT amount. That will give you inclusive. Or you can say 1,300 inclusive times 115 over 100. Let's say VAT inclusive. This is the amount that has VAT. This is VAT inclusive. We say 1,300, which is the VAT exclusive amount. Let's say, yeah, let's change color. Make it red. 1,300 multiply 15 multiply 115 divide by 100. So you take the exclusive amount, you multiply it by 115 divide by 100, and then that will give you 1,495. Or you can just take the VAT amount, add the exclusive amount, and then you can get the same thing. So we will go to 1.1.2. So number B, we are given the VAT inclusive amount, and we need the VAT amount. We need the VAT amount and the VAT exclusive amount. So for this calculation, we are asked to calculate the VAT amount. So I will take the change color 2,760, which is the VAT inclusive amount. Multiply that by 100 divided by 115. So when you are given the inclusive and you want the exclusive, this is how you do it. That is going to give us 2,400 rand. Then we will say the inclusive amount, which is 2,760, subtract the 2,400, or you can say the 2,400 multiply by 14 divide by multiply by 15 divide by 100, and that will give you the VAT amount, which is 360. So this is how you first get the exclusive. And then for number 3, we are asked to get For number C, that's where we want the VAT exclusive that we've just calculated. So for number 3, that is 2. That will be 2,760 multiplied by 100 divided by 115. So we have the inclusive, we want the exclusive, that's 2,400 rand. So this is how the calculations are. And then we're looking for D. We just have the VAT amount and we're looking for inclusive. So the VAT amount is 15%. So we're going to take the VAT amount. We got it by multiplying 15. So we're going to take, first we have to look for the VAT exclusive in order to find the inclusive when we have the VAT amount. So we'll say 525 divided by 15, because it's 15% of exclusive, and then we multiply that by 100. Please try to watch that video. I'll try to link it in the description below if I can. That is 5. The VAT amount is 525, and then we are going to divide that by 15. Let's put that inside brackets just to have a neat calculation. Yeah, multiply by 100, and that is going to give us 3,500, which is the VAT exclusive. Now to get the inclusive, which is what we're looking for, we'll multiply it by 115 and divide it by 100, and then we'll get VAT inclusive as 4,025 rands. So that is the answer. Actually, this is the answer for question 1.1.1. This is not for ABC 1.2. I made a mistake, but it's not a problem. You just know 1.1.1 it's false, 1.1.2 it's false, 1.1.3 is true, 1.1.1.4 is true as well. And then the first calculation is for A, the second one B, C, D. So I just made a error here. So this will be D, this will be C. No, C is this one. This will be C, and then this one will be B, and this one will represent A. So here we are. I've corrected what had previously been incorrect. So there you have the correct numbering of the question. So we are now at 1.3. So for 1.3.1, it says calculate the VAT that the business must either pay or receive. Business is a registered VAT vendor. So here we have the information down here. The VAT from sales of goods is 5,280, and then the VAT on municipal service is 279, and then the VAT paid on purchases of trading stock is 3,870. So what 1.3.1 says calculate the VAT the business must either pay or receive. So that's 1.3.1. So we have the 5 to 80, and then we will subtract the 279 and also subtract the 3,870, and that will give us 1,311. So That's how you do 1.3.1, 1.3.2, 1.3.3. So you discovered that the VAT amount was not being submitted on due dates. On inquiry, it was discovered that the manager was using the VAT money to pay for business expenses. Give 1 point of advice to the manager and explain why you offer this advice. So, firstly, we have to advise the manager. The manager must submit the VAT collected directly to SARS on the due date, because failure to do so will result in SARS investigating and imposing penalties. So they will have to pay penalties if they do not submit the money to SARS. And then 1.3.3 says, Mpumi, the owner, suggested to the bookkeeper that they charge VAT on all goods sold, including the zero-rated goods, but keep a separate journal for the VAT payables to SARS. Comment on this suggestion, provide 1 point. That's fraud. If SARS says you do not charge VAT on these items, you are not supposed to. So they are committing fraud and want to discourage customers by using SARS as a front. Discourage customers by using SARS. So let's look at the memo for this question. So for the true or false question, and then for this VAT table for 1.3.1, 1.3.2. So you discovered that here you give 1 point of advice to the manager, not what is written here. Whatever that is relevant will be marked. And then 1.3.3 is here. You are given mark for any possible response that's related to this part. So you don't have to beat up yourself and have to have the same reason like this one that we have on the question. Let's go to question 3. Okay, the fixed assets for question 3. So for question 3, we are going to do fixed assets. The information relates to Malan Traders for the year ended 28 February 2018. So guys, if the financial year ends today, it literally starts tomorrow. So it ends on the 28th of February 2018. So it started on the 1st of March, which is tomorrow, the following day, but you date it back to 2017. Keep that in mind, that if it ends today on the 28th of February, it starts tomorrow. Don't consider leap year. It's not every year, so we don't consider that. State reasons why the asset register. So 3.1.1 says, state one reason why the asset register is a useful control tool for fixed assets. Because it helps it helps with the verification of assets for balance sheet purposes. So we have our balances there, and we are able to know verification of assets for balance. We have to know the balance. We are able to know the balances of the assets and that is very useful for balance sheet because assets are recorded at cost. Calculate the depreciation on vehicle for the year ended 28 February 2018. Calculate the carrying value of the vehicle on 28 February 2018. Refer to information C. You are provided with a page from an asset register for the asset register for an item of equipment, a display fridge. Calculate the missing amounts denoted I to IV in the extract provided. Show workings. The owner of Malan Traders is concerned about the management of this and safety of the vehicles. Despite installing security cameras, the following were reported. We will just do that one last. So that's with 3.1.2. Let's calculate depreciation on vehicles. So this is the extract from the trial balance. We have vehicles at cost, equipment at cost, accumulated depreciation at the beginning of the financial year. That is 1 March 2017, accumulated depreciation on vehicle and equipment. A new delivery motorbike cost price of 60,000 was purchased on 1 September 2017. That's part of vehicles and correctly recorded on this date. Depreciation 20% on cost, equipment 10% on diminishing balance. So cost, when they say on cost, you just take the cost price, multiply it by 20%. But when they say on diminishing balance, you say cost minus accumulated depreciation, then calculate your depreciation. Extract from the asset register, item display fee purchases. So this is the one that we have to do last. So firstly, before we do inventory, let's do fixed assets. Now here we are given vehicles at cost. Vehicles are calculated at cost. Yeah, so let's start calculating depreciation for the for the old vehicles. So the cost price is 300,000. The cost price of the vehicle, you're given the cost price of the vehicle at the end, and then you're given accumulated depreciation at the beginning of the financial year. So that 360 includes the 60,000 rand motorbike that was bought. So you're gonna take the 360,000 rand, subtract the 60,000, so that you can get the cost of the old vehicles, which is 300,000 rand. And depreciation is calculated on 20% on cost. So let's try to calculate depreciation for old vehicle first. Depreciation on vehicle. We're going to say old one first. We'll take the 360,000, subtract the new motorcycle, which is 60,000, and that will give us 300,000 rand. So this is old vehicle price cost. So we'll just say 300,000 rand multiply by 20 is depreciated at 20%, divide by 100, and that will give us 60,000 rand. So let's look, guys. The new motorbike was purchased on the 1st of September and the financial year ends on 28th February. So we're going to calculate from September until 28th February. We have September, October, November, December, January, February, and that is exactly 6 months. So we've had the motorbike for 6 months. 60,000 multiplied by 20 divided by 100, and we had the motorbike for 6 months, so that is 6 months over a total of 12 months, and that's going to give us 6,000. So total depreciation will be the 60,000 plus the 6,000, which will give us 66,000 rand. So that is 1.3.2. Then we also calculate the carrying value, book value of vehicles on the 28th of February. Book value is the carrying value. So carrying value is calculated by saying cost minus accumulated depreciation plus depreciation. Carrying value equals to cost of the fixed asset. Then we will subtract accumulated depreciation plus depreciation for the year. So accumulated depreciation is previous year's depreciation. So here we have 360 as the cost, and then we are going to subtract. We'll look we'll go and check what is the accumulated depreciation value, but let's just include the depreciation. 66,000 is for depreciation that we've just calculated. Accumulated depreciation on vehicle on the 1st of March 2017 is 108. So we'll put 108, and then this will give us 186,000. So this is the full calculation for 1.3.2. Please subscribe to the channel. Subscribe, guys, if you're finding this information quite informative. Please subscribe. So 3.1.3, you are provided with a page from the asset register for an item of equipment, a display fridge. Calculate the missing amounts donated by I to V in the extract provided. Show workings. So this is what you are provided with, and you have to calculate all those missing figures. So firstly, we would start with 1. We are asked to calculate carrying value. So let's look. The item is a display fridge purchased on the 1st of March 2016, purchased for Snowfees Limited. The cost price is 26,000. Depreciation method is 10%. Diminishing balance. Diminishing balance is cost minus accumulated. Then multiply by the percentage. So we asked to calculate the depreciation on 2018, accumulated depreciation on 2018, and then the carrying value on 2017. So this equipment was purchased on 1 March 2016, and that financial year ended 28 February 2017. And then we had another one that started on the 1st of March 2017 and ended 28, which is the 28 Feb, which is the current one, 2018. So we are trying to calculate the carrying value for 2017. The cost is 26,000 rand, and then the depreciation is 10%. So the vehicle was bought on the 1st of March 2016, which was the last financial year. Let me write it black, and then 1 March at the beginning of the financial year 2016 to 28 Feb 2017. That's exactly 12 months. So we bought this fridge for 26,000 rand. It was new, so there was no accumulated depreciation. We times this by 10%. 10 divided by 100 is 10%. And then we bought it at the beginning of the year, so we don't have to count the months. So that is 2,600 rand. That is the value of depreciation. Now for carrying value, which is the book value as well, it will be equals to let's just say 26,000 rand minus the depreciation, which is 2,600, and that's going to give us 23,400. So this is the answer for the carrying value number 1. And then number 2, we are asked to calculate depreciation for the current year, 28 February 2018 depreciation. So that is we asked to calculate depreciation for this year. So we're going to take 23,000, which is already the carrying value of last year, and then multiply that by 10%, and that is going to give us 2,340. So this is the depreciation for this year. So we have to calculate accumulated depreciation on 28 February 2018. So that will be the depreciation for last year and this year. Accumulated depreciation, that will be the 2,600 rand, which is for last year. The depreciation for last year, 600 rand, plus the one we calculated for this year, which is 2,340, and that's going to give us 4,940. So these are the values that we've just calculated above. This one is for and then this is number 2, number 3. So we're going to do the last one. So now we are asked to calculate carrying value at the end of the financial year, which is 28 February 2018. So carrying value on 28 Feb 2018. We are going to take, firstly we had 26,000 when we first bought, and then the first subtract the first depreciation was 2,600 plus the second depreciation, which was 2,340 for last year and this year, and this is 26,000 subtracting 4,940, and that is going to give us an amazing 21,060. So this is how we do these calculations. I hope you guys understand them. Very important. And then here it says the owner of Malan Traders is concerned about the management and safety of the vehicles. Despite installing security cameras, the following were reported: vehicles are not being parked, returned to the premises at the end of the working day. That's number 1. Number 2, certain employees are using the business vehicles for their personal use. Give one consequence of the above practice. So if this continue to take place, vehicles may be damaged, go into an accident, and again, what can possibly happen? And then provide one control measure. He can have security guards for after hours to make sure that everything has been returned. So this is the memo for question 3 for the fixed assets. So let's finish 2.3 inventory part. The information below relates to Manfred Traders for May 2018. They use the perpetual continuous inventory system, meaning that stock is recorded on a continuous basis. So every time someone buys, inventory system to record and manage trading stock, provide any one feature of perpetual inventory. The coding system is that stock movements are recorded on a continuous basis in the trading stock account. That is one feature. I'll even show you the memo after, don't worry. 3.2.2 says take all the relevant information into consideration to answer the questions in your answer book. Provide the correct details on the debit side. Provide the correct details of the contra account I. Let's go to I. So that contra account I will be cost of sales. Let us announce general. And then we have the total cash sales for May 2018 was 79,200. Calculate the amount for 2 in the trading stock account. So we go to the trading stock account, here it is, and calculate the cost of sales there on the debit side, on the credit side. So we'll take the amount that we given, sales for the year, which was cash sales for May, 79,200 rand. Let's see. Trying to look up for the markup percentage. Sorry. So Manfred Traders use a profit markup of 60% on cost. So we're going to take the total sales, which is 97,200, and multiply that by 100 over 160 to take out the profit, just to be left with the cost, and that will be 49,500. So for number 2, that is 78. To get cost of sales, we will multiply that. Remember, VAT inclusive and VAT exclusive. We want the amount excluding the markup, so that will be 10 divided by 160. That is 100, sorry, and this is going to give us 49,500, just like that. So number 3 says stock with a cost price of 1,600 was donated to the CPCA. These goods were marked at a special price for 2,400. The bookkeeper did not enter this transaction. Indicate the correct double entry for this. So stock was donated. Trading stock was donated. So trading stock increase on the debit side and decrease on the credit side. So we are going to credit trading stock, and then donations are an equity, owner's equity item, and owner's equity increase on the credit side and decrease on the debit. So it's an opposite of assets. So we are going to debit donations because owner's equity decrease on the debit side. We're going to record them at cost of 1,600. So we debit, it's like an accounting equation. We debit donations, debit donations and then credit trading stock because it's decreasing, and then the amount will be 1,600. The fifth one says in yeah, so must on the the fifth one says calculate the balance of trading stock on 31 May 2018 before a physical stock take. Include answers from I to, you're gonna do all the things you have calculated. So what is gonna happen here is that the debit side has a 99,250, and then the credit side has the 23,850. It has the 2,100 rand. It has the 49,500 for the cost of sales, and the 1,600 for donations must be on this side. So we're going to take the 99,250, subtract, which is the debit side, subtract the credit side. So we will take the totals for the credit side. We have 23,850 plus 2,100 plus 49,500 plus the 1,600 rand, and that will give us 77,050. And then for the debit side, we had a total of 99,250. So we will subtract, it's bigger than the credit side, so we'll take 77,000. We have to just balance it, which is the balancing figure, and that will give us 22,800. That is the answer we are looking for. Subscribe, like the video. After a physical stock count on the 31st of May 2018, the actual value of the trading stock on hand was found to be 1,230, less than the balance reflected on the trading stock account. Provide two possible reasons for the difference between these two amounts. So you see, the actual value of the trading stock on hand was found to be 1,320, less than the balance reflected on the trading stock account. So when they count, they find out that the physical stock count is not the same as the one that appears on the books. So that may be that stock was removed from the storeroom without proper documentation or authorization, or it was just stolen. Please like the video, comment and subscribe, share. So this is the memo for inventory. So this is how you will be marked. Thank you very much for watching, guys. Until the next one.